Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Shawn Cruz. He's the manager of trader services over at TD Ameritrade with our midday update. And Shawn, the big question today certainly is plenty of opportunities for traders out there, that's for sure. But is it time for investors to look at buying the dip here with some of the sell-off that we're seeing?
Well, and I think there's a little bit of a sense that this isn't going to be just like what we were seeing with the trade tariffs last year. Although it is going to be a big driver of volatility, this is actually going to have a little bit more of a deep and I think lasting impact the longer this drags on. And I think right now markets are trying to come to grips with the fact that we might see a slowdown that could last into the second half, at the very least for the first half of 2020. So if you want to buy something, and there's some names you've been looking at, you can buy cautiously, but I wouldn't start aggressively buying this, because if you were looking at that move this morning, you got a little bit of a head fake where you had VIX down and it was sub 23, and you had the markets looking like they were going to rally. If you took that as I need to jump in and try and catch this falling knife, and the move we've seen this afternoon, we've seen accelerated selling. We've now got the VIX, last time I checked.
Yeah, actually, let's pull up our first chart here with the VIX here, because we're about at that 20, I'm not sure exactly where we are right now, but this is a reading of about 26 here. I think it's around 27, 28 last time I looked.
It was up around 27 or 28. So if you're looking at this market and trying to figure out, is there some buyers that are come back in? Are people feeling like going in and taking on more risk? I would watch the VIX. You need to see the VIX definitely below 25, probably closer to 20 before you can say maybe this is a good opportunity for me to go in and start buying before everyone else starts coming in and buying. But there's some risk-off trades that we're going to have to see unwind before that is, and that is one, VIX needs to come down, and we also need to see yields move a little bit higher because the yields are incredibly low right now. If you look at the 30-year, I think at all-time lows that we've seen for the past decade or so, that lets you know that there is just a lot of risk-off moves right now. I want to see those trades unwind before I start going in and buying more risk assets like equities.
All right, speaking of levels, let's take a look at our next chart here, because you identified a key level of support, and we're probably have broken through that at that point. In fact, 31, 38, yep, we are below that.
And so this was a key area where if you've seen pullbacks we've seen in the past, that usually is where you see buyers come back in. The reason why I was worried about this level in particular, I have the volume profile up alongside here, and if you look, there's no real volume that goes on if we start breaking below this level. And so what that means is you could see us move pretty quickly down into some of these lower levels, closer to 3,100 if we don't get buyers coming in. Because the one thing that's going to stabilize this market and really cause us to at least stop here or maybe even turn back around, you need buyers that want to come in and buy. Look at the volume profile. There's really no one that wants to do much of anything here in the range we're trading in. So you need to start seeing some buyers step up, or at least the selling abate a little bit. And we may see some sellers start to get exhausted, especially after the move we're seeing today.
All right, let's move along to our last chart here. This is a Russell 2000, and below its moving average as well.
They are, and so this is actually interesting to see. The Russell has been underperforming some of the other markets today. I think what you're seeing there is investors are starting to come to terms with the fact that even though you look at the Russell as usually insulated from global concerns because they generate a lot of their revenues here domestically in the U.S., that isn't necessarily the big risk here. The risk is on the supply chain side. And if you're looking at Russell 2000 companies, they typically do source overseas. You will have some come out and say, well, we source from Mexico, but the problem is that plant in Mexico probably sources from China as well. So if China's hitting gridlock, no one's going out there going to work, your supply chains are going to be disrupted. And for these Russell 2000, these smaller companies, they may not have the resources to ride out a slowdown quarter after quarter. So you start to come into some solvency issues. If you're looking at bonds and fixed income, you could really start coming into maybe not full-on bankruptcy where they're not able to pay, but they may have to do some restructuring. So I think the Russell may not be the safe haven that it usually is when you see this concern globally.
Yeah, I also want to talk about the consumer confidence release that we saw today. And the numbers have been fairly good out of the U.S. in terms of economic data, but those are also lagging indicators. It's not a look in terms of what's happening ahead. And my concern is, yes, it's going to probably hit a number of companies that had that China and international exposure over the next quarter or two because supply chains are going to fall behind. But look at all the conferences that have been canceled. Look at how it's trickling down from hotel workers to restaurant workers to the gig economy. That's where the jobs have been added, right? And consumers are 70% of the GDP. So I really think that consumer confidence in the story of 2019 with a healthy consumer spend, that's really a concern of mine, in addition to what we might see with earnings.
And I think it's really important when I was looking at this consumer confidence number, you're absolutely correct that this is some sort of a lagging indicator. And that's why every time I get any sort of economic release out, the first thing I do is I go look and see what that survey week was or what period that covered. recovers. So the consumer confidence numbers, the headline actually came in pretty solid. I think there wasn't anything concerning in these numbers, but those numbers were taken as of February 13th or earlier. So if you think about when we've seen the real shakeup happen in the markets, certainly over the past couple days, but the coronavirus started to seem like it was picking up pace over the last 10 days or so, and you sort of fall out of that survey period. So I think you need to wait and look at some of the data we're going to have coming out here in March to get a full view of how the coronavirus spread is impacting not only some of the hard industrial data, but certainly a lot of the sentiment data too. I think we're going to get a better read through here.
You know, speaking of numbers and speaking of data, it feels as if there's a lot of mistrust out there in terms of what kind of data is coming out around the coronavirus. Then you have the CDC who came out mid-morning, and it sounded like, it's not an if situation, it's a when. And it seems like there's a lot of conflicting reports coming out there that, it's not that big of a deal. It's like the common cold. Then you have the CDC coming out, which sounded, a little bit more malign to me than benign, and it's just very conflicting out there right now. And with the markets being at such elevated levels, even just as recent as February 19th, we were sitting all-time highs. It's amazing to see just how sensitive the market is to this.
It is, and I think if you want to, I think it was a turning point in markets where they started to realize there may be something a little bit more real here. Look at what happened when you started to see it spread into Italy, especially around Milan. Milan is their manufacturing center, that region. So what the concern is, if you're looking at the EU where they have open borders, we might get a little bit of a taste of how this thing can really spread around, depending on how it goes from Milan to some of the other surrounding countries. I think Germany, very, very close to where they're sitting at, because that's up in the northern regions of Italy. Germany is the economic powerhouse of Europe. So if you see this spread over to into Germany and you see the EU come to a grinding halt, similar to what we're seeing out of China, now you start to see how this contagion can become real. And I think investors are also starting to notice that although maybe the case of infections has slowed down, it's not stopping, and we still aren't very sure how we're going to go about treating this or how you do contain it once it shows up somewhere. So that's why I think you're seeing investors just completely move out of risk assets until we get a better feel for what this is going to be. And we don't even know where we're at in this. Are we in the first inning? Are we in the third? Are we in the ninth? We have no idea. So I think that's another reason why you're just seeing investors completely move out of risky assets.
Right, and the whole thing is if you don't get in at the exact bottom, there is going to be plenty of opportunities. I mean, the Dow's almost down, 1,600 points in just 2 days alone. If you don't get in there at the exact bottom, you're certainly going to have more opportunity as this thing shakes out.
And that's why I think traders are coming in here, and traders are seeing some opportunity. But yes, if you're an investor, this is not the time to come in and try and catch a falling knife. You're maybe not going to pick the exact bottom, but you'll probably still get an attractive entry point somewhere along the way here. And that's why I'm saying watch VIX, watch treasury yields. Those are going to be the first sign that people are starting to move out of those safe havens and back into risk.
All right, Shawn, great advice as always. Thanks for joining us at MarketSite. And thanks for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.